Welcome, members and guests, to the Virtual Investment Club of Sacramento. We are a better investing model club open to the public. All of our meetings and stock studies are virtual, allowing us to have members from around the world and the U.S., including Canada and China. Guests, you will be muted during the meeting as observers and will have an opportunity for questions and comments after the meeting ends. The stocks presented today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. The views expressed are those of members and do not necessarily represent those of Better Investing. This meeting may use products or services not endorsed by Better Investing. The club is not endorsing or promoting the use of these websites, products, or services. This session is being recorded for future use. Okay, so I will go to our agenda. And first on the agenda is our treasurer's report.
Okay. Can you hear me first of all, or am I muted?
No, you're fine. Should I make you the presenter?
Sure, please.
Okay.
Okay. Can you see my screen?
Yes.
Yes.
Okay.
Yes.
All right. So first of all, last month we decided to buy 30 shares or $1,000 of Air Lease Corporation and $1,000 of Pacific Western Bank. Now I usually will round up the number of shares based on the price. So we bought 30 shares of Air Lease at $34.21, which came out to $1,026.30, and 25 shares of Pacific Western Bank at $40.44, which came out to $1,011. So when we vote to purchase something for $1,000, it's actually I round it off depending on just to get an even number of shares. So we do have a lot of cash on hand, so I don't think that's an issue. This is our portfolio heat map from iClub, and if you haven't seen this before, it's these are the stocks that the club holds, and the size of the squares represents the amount of the holding. So the larger the square, the more shares we own. In this case, you can see that cash is quite large at about almost $5,000.
Hey, Haney?
Yes?
Question, you said the size of the box is dependent on the number of shares we have. Is it the shares or the value of that holding?
Sorry, the value, I apologize. Yes, so the dollar value, not the number of shares, the dollar value. So one of our largest holdings is Facebook and IPGP, Skyworks, Disney, 5. So the ones on the outside here are the ones that we have the most exposure to, and then the rest are smaller. Also, the colors represent how the stock has been doing. So if it's dark green, that means it's been doing well. The value's gone up. Our total portfolio at the moment, including cash, is about close to $40,000. And if we were, if we were actually using real money, and so the shares or the units in the club would be worth about $14 each. And each month I just arbitrarily assign a dollar value when we put $1,000 each month into the account, into the broker, and I will divide that up between the various members, trying to balance out so that each person has the same amount of money. But it's going to take a while to get to that point because it's a little bit off right now. This report is called the GainLoss Report. Again, this is from my iClub. It basically is an absolute dollar gain or loss for each holding. You can see the first column is tells you when the stock was first purchased. This is a little bit misleading because if you look at Air Lease here, it was first purchased in January of this year, but we made 2 other purchases. So this report doesn't show additional purchases; it just shows the date of the first purchase. You can tell how many times it was purchased because of the cost, the total cost here. So it's $2,000, and that usually means we bought it twice, and at $1,000 each. I did not sort this by from smallest to largest, but you can see here the absolute gain or loss for each of the stocks that the club holds. And so our best performer, Five Below and Heiko, and then IPGP at 52%, Entergess at 50%. Some of the ones that are not doing well are Bank of the Ozarks and Biogen at the moment. Now, this is an absolute sort of dollar figure and a percentage. It's not a compound annual return. If you want to see that, that's this report. And the club has been in existence since 2016, I believe, in May.
Yes.
So yes. Less than 3 years. And so when you look at the columns at the top here, it says 10 years, 5 years, and so on. We haven't been in existence for that long, so that's why they're showing an A. So our 1 year return has been 7.8% compared to negative 5% for the Vanguard 500 index and negative 12% for the Russell 2000 index fund. These are 2 sort of benchmark reports that iClub uses, and one is a S&P 500 type of index. The other is a small company index, the Russell 2000. So we're doing quite well relative to these because that's if you say this is 8% and this is 13%, so that's a 21% difference that we're beating the Russell by, and 8 and 5 is 13, so we're beating that by 13%. So that's quite good. And then lifetime, again, we're doing well against the 2 indices, and the last column here is year to date, and you can see we've done really well, 55% year to date, and you can see the 2 indices, 21 and 13%, and the graph is just showing the same information that the columns up top are showing. Now this is
a question.
Yes, absolutely.
Oh, thanks. My name is John Dennis. On that lifetime to date column,
yes,
is the 12.74 an aggregate total over that whole period, or is it an annualized rate?
That is a good question. I believe it's an annualized rate.
Okay. Thanks very much.
Okay. Now this report is something similar using, so we use 2 platforms to track our portfolio. Actually, we use 3, Morningstar, My iClub, and Manifest Investing. I have a Manifest Investing account, and I track using that, but Manifest doesn't have the same functionality as the other 2, so it's good for certain types of information which I didn't present today. But this performance report is from Morningstar, and it's a little bit confusing. I don't understand it. So if you look at these 3 rows here, we have total return, personal return, and index return. And I think the personal return includes cash, and includes any dividends or reinvestment that has taken place in the portfolio. But what's confusing is if you look at April, for example, the total return and the personal return are the same, 7.5, which is fine. But the index return is 1.97, so a lot less. And this bar represents the personal return, and the green line is the total return for the portfolio, and the gray is the index return, which is higher than both personal and total return. And yet, when you look at the column here, it says 1.97 versus 7.55. So I'm not really sure how they how this works. I have stayed away from Morningstar just because I had trouble trying to decipher how they did their calculations and so on. But it is there, and if someone wants to look at it, I have been keeping it up. This is again from my iClub, and basically it's using analyst forecast for each of the companies that we own, and projecting forward. And there's sort of three buckets: greater than 12% EPS growth, and this is 5-year, like 3 to 5 year long-term EPS. So greater than 12, 7 to 12, and then less than 7. And you can see each of the companies and where they fall into those three buckets, and the projected EPS growth rate. So this would be used to make some decisions going forward. If we wanted to have a higher return, for example, maybe we could drop off some of the lower performing assets and replace them with something else if that was the strategy.
What is the source of this growth forecast?
So these are analyst consensus estimates from, I believe, Morningstar. And if the Morningstar, if there are no forecasts for a particular stock in Morningstar, iClub uses an algorithm, a proprietary algorithm, to project based on past performance.
Oh, okay.
Now, again, one thing that's confusing about this is Bank of the Ozarks always comes up as unknown, and maybe it's because it's OZRK and they changed their thing to OZK. Maybe that's why.
Yeah, try that.
But they should. I mean, I just left it, but I didn't. Maybe I should manually go back and change it. Maybe that's why. Because when we do other sort of pie charts that show sectors and so on, Bank of the Ozarks always shows up as unknown. So I'm guessing that might be the case. Anyways, going back to this, I think it shows a pretty good distribution. We have a number of companies that are high growers, like Five and Facebook and so on, Heiko, and then some that are sort of mid-range, and then the smaller ones. And I think that's a good sort of balance, because typically these slow growers are also less volatile. And so if you have everything as a high grower and there's a lot of volatility, the portfolio could experience a lot of ups and downs. So it just depends on what the strategy is. And this is just, I always try to put something here for interest. So what I did was I went to look at the valuation metrics for the S&P 500 as a whole. And there's three metrics: PE, price to book, and price to sales. And on the right hand side is this axis. The y-axis is price to book and price to sales, and on the left is the PE axis. And then at the bottom is the years going back quite till about 2000. And you can see that right now the PE for the entire stock market is sitting at around somewhere around 20. And price to sales is a bit over 2.0, maybe 3 or 4 it looks like, and price to book is about 3.5. So just keep those numbers in mind: 20 for PE, 2.3 or 4 for price to sales, and about 3.5 for price to book. So what I did was I went to Yahoo Finance and then put in, and this is a very busy chart, and I apologize, it's a lot of information here. I've posted this on the Club Google Drive, so you can go and have a look at it after it. But I just wanted to sort of highlight a few things, and that is, you can see. So what I did was I put the trailing PE, the forward PE, the earnings yield, which is basically the inverse of PE, 1 over PE, the PEG ratio for 5 years going forward, the expected, price to sales trailing trailing 12 months, and price to book most recent quarter. And so the colors signify different things. So for example, looking at, if you look at Air Lease, so the trailing PE, the historical PE is about 7.89, and going forward, the PE is projected as 5.42. So the reason it's red is because it's dropped. There's no PE expansion, and you would naturally assume that the stock price is not going to do well if the PE is not going to expand. The earnings yield, which is the inverse of PE, is essentially, you can compare that to a 5-year treasury bond, which I think is in the US is around maybe 2% or something, 2 or 3 at the moment. Yes.
This is very interesting stuff for the whole portfolio. Very nice. Thank you.
Oh, thanks, Bernard. It's very busy, and there's a lot of information here, but you can sort of go through and at your leisure and have a look at it. So the earnings yield, you should compare that to a 5 or 10-year bond and see how that particular stock is doing. And then the PEG ratio, if it's less than 1, it's a buying opportunity, because it means that the growth is higher than the PE ratio. PEG is PE over growth rate of earnings. But for Air Lease, if it's a stock that we own, we probably want the PEG ratio to be high, which means that, again, the price is going to go up. And then the other 2 valuation metrics, price to sales and price to book, I put those in. If it's green, that means it's slow and it's a good buying opportunity. But again, if you already own it, then you want it to be red, to be high valuation, because that means that the stock has done well. So I hope that makes sense. Like I say, this will be in the drive, and you can have a look at it. You can compare it to this thing here, which is the S&P metric. And that's it. Questions?
I have a question. Now, you talked about forward PE.
Yes.
I think the future PE or the forward PE should always be lower than the present PE if the earnings are greater, if the company's growing and next year's earnings are larger than this year's. So you're dividing by a larger earnings, so that makes the PE lower.
That is true. It depends on.
You're using the current price and then a larger number for earnings, which is next year's earnings.
That's true. If you're using the projected earnings and the current price. If you're using a forecast price, then it's different. But you're right, Tom. I think that makes more sense.
But wouldn't it usually be better if the PEG ratio, the lower the better?
For buying, yes.
Okay.
Any other questions?
Haney, would you mind if I show real quick another part of Morningstar?
No, not at all.
Roy,
Um,
can I make you the presenter,
Yeah.
Roy?
Sure.
Okay.
Okay. Yeah, hopefully it'll work this time. It worked half the time for me. Go ahead.
Oops.
There we go. Originally, when we first started, Tom set us up with Morningstar, and we have the way of tracking it, and that's how I used it when I was the treasurer. And we set up some different views. But you can see our first purchase was BIIB back in May of 2016, and goes on. And you'll notice that, like Facebook, there's two entries. This shows that when we bought each one, um, and then this will show how well we've done with that particular selection. And I think some of the ones that we looked at with Haney, we looked pretty good, but there might have been one of the purchases that weren't so good. But this tracks it just as a tracking device for how well our decision making has gone. And if we see a lot of red, then we know we need to improve something. And then the other thing you'll notice, this doesn't have cash, which is fine
So,
because as a tracking just for to see how well our decisions are made, this is great. But that's why I went and got us the approval to use my iClub, because it gives you the information like Haney's been showing us that a real club would need to know, including the drag on it by having too much cash. But
Roy, a
yeah,
couple of points, I guess. So, my iClub does the individual. It'll show you when we bought certain stocks, but it doesn't tell you. You're right. It doesn't tell you how that particular purchase did. So we bought
right,
Ozark twice, and you wouldn't be able to tell because
right,
it consolidates the two. The other thing
right.
is I found out is that they apparently you can include cash now in Morningstar. I've tried very hard to
Yeah.
figure out how to do it. I couldn't. The only
But
way I think is for me to call technical support
well,
or something. But
I wouldn't, because if we want to know what the cash is doing to our club, my iClub tells us very well. This, like I said, we use this, or I used it, and I think Tom set it up for this for tracking, just to see about our decisions. And yeah, we can look in iClub and see when we bought something, but when you do the report, it's the consolidated purchases. So I like this, but for what it is, we get a lot more information from iClub, but I find this still useful. But anyway, I just wanted to show, especially the new people, this is our other tool that we use, and it's got a limited purpose, but I think an essential purchase.
so maybe showing this particular report is a good thing, just to see how we've done on each of the decisions that. So maybe I can include that in the next month's report.
Okay. But anyway, I just wanted to show that.
Yep. No, that's good. Thanks.
Okay, and I think we can go right into your topic then, Roy, your education
Okay.
topic.
All
Beer?
right.
Is that what that's a kettle.
Yeah.
Yeah. What we need to do is actually take a tour of one of the businesses that I like, which is Anchor Brewery in San Francisco.
Absolutely. That sounds like a very good, worthwhile exercise.
And it's where my steam beer is made, right in this kettle. So, I made my topic called Search and Research, panning for gold. And I want to just take a moment to say that, we have a screening tool in the online tool. And so you go here and you click on My Studies, and it opens up into the portfolio and studies. But this magnifying glass, you click on that, and as you can see, that's now green. And the green says where you are at the present time. So this is the search criteria that's given. This is the screen. It actually, for Plus, it's a little bit more. But if you have Core, you'd still have a screening tool. You can have growth. You can do it by small, medium, large. You can look at the sectors and the exchanges. And I was going to show that, but you can look at it yourself when you look at the screening tool. There's the American exchanges. There's also Canadian exchanges in there. So it's useful for everybody in the club. Well, except if Jane can't have access to those, that would be a problem. But for anyone in North America, you can access that. And again, you can select the size. You can change your exchange. And what you can do is add certain criteria. Just this example, I used 8% sales and earnings growth, and U exchanges only. Then with the SSG Plus, you can see there's more criteria. There's a few more of these predefined screens, and including one that's for small company. And then there's a ticker heat map, which is based on studies, I think created in the last 90 days, but by those clubs that use My iClub. If you're a Bivio club, that you're not included in this data. Again, going back to the criteria, you can select the sector, and these are the sectors that are represented by Morningstar. And this this tool uses Morningstar as we get our data from there for our SSGs, and so that's why this is that way. If you look at other companies like Yahoo or Value Line, some of these will look different, and some of the stocks will be in different sectors, and certainly it's different industries than what Morningstar shows. So, but anyway, this is useful for that. And this may seem a little overwhelming at first. Well, you click on this question mark, and you can access tutorials and guides. And this is what happens. And you can see the question mark is now green. So this is what you're looking at. There's tutorial and or tutorial L and the quick start guide.
Oh, very good. Very convenient.
And here's the guide right there. And then this subject of looking for small stocks has been presented several times in various webinars put on by BetterInvesting. And you'll see my name listed a couple of times. I've done it for Stock Up and also for Ticker Talk. And there was two different people did it in February and March in Ticker Talk. So you can look at those and you can see the discussions and the various ways. So don't be afraid to use the screener. It's very useful, and you get a lot of help. So you use that to find gold. Okay, now we have to research. We've done the search, and what happens when you're looking at small companies, a lot of them look like this. And like Air Lease, which we own, is now moved into the middle, I believe, but or mid-size, but it's still, Value Line still doesn't give us a full report like we're used to, say, with Apple or something. And I'll blow this up a little bit. Here in the middle, with the box, it says consensus 5-year earnings growth not available. Quite often, they will post something that says ACE or analyst consensus estimates. suggest 12.5% or whatever it is, and that'll be there. But that's some information you get. But you can see the annual rates. These are historical numbers. There's no estimates like you get with the normal report. But you can also pull up the computer, the industry report. And here, like this computer software, 9 out of 97. And you want to probably pick industry that's in the lower numbers. The way Value Line, makes those determinations is those industries that are doing well and expected to grow, and maybe it's momentum, but anyway, they give them low numbers. If you're number 97, it's going to be a laggard, at least that under Value Line's theory.
Now, Roy, I have no access to Value Line, and I guess I'd have to go to San Francisco or something. But they don't carry it in our library anymore, at least not in Natomas.
Sacramento does not have that anymore. In fact, they also don't carry Morningstar. They used to, but yeah, I have a card from San Francisco. Megumi has access to Sonoma County, and Santa Clara County has it. So the Bay Area has access. Sacramento, in its ultimate wisdom, decided not to. But so, even without Value Line, there are other ways you can get information. Yeah, what was your question?
No, I was just going to make a comment. There are a couple of libraries that will give you online access for $20 a year. I can't remember. I think it's in Washington.
Well, also Fairfax, Virginia did, but
Fairfax,
I found that one to be a horrible. Maybe it's the distance, but it didn't work well for me. So I had it for 1 year, but then I discovered San Francisco, and since obviously I go down there for liquid reasons, I joined their library. But the SSG, will give you a lot of information. For one thing, you can just look at this graph, and that tells you a whole lot of stuff. But it has all the historical stuff, just no estimates. But there's a research tab, and those are the various things you can pull up. There's a bunch of stuff from BetterInvesting. There's the company website. There's other analysts give you information. The SEC filings, and other information. Yeah,
Roy, I oftentimes I'll use the BetterInvesting member sentiment. What do you think of that?
They are people that hopefully are trained like we are, and so they may not be totally worthless. But you'll see on most of those companies, you may have a sales projection of 3, and the next one maybe 10 or even 20. So look at it carefully. Don't just go to it and say, "Oh, I'm going to use this." Look at it.
Okay.
Yeah. So what I've done in that regard is 2 things. One, if there's not a lot of members that are studying that particular stock, then you have to be careful, and you have to kind of look at the numbers and pick or exclude certain entries that seem to be way too high or too low. But if you have a lot of people doing a stock study, it doesn't matter, because when you look at there's a button at the bottom where you can take the average of all of them. And when you take the average, even if there's some outliers, they tend to sort of be overshadowed by the majority. So like Roy says, I think you have to kind of look at how many people are studying, and then if not a lot, then have a closer look and exclude those ones that seem a little bit.
Well, and for example, I wasn't paying close enough attention when I was working on the study with John Dennis, and we looked at that, and he caught right away there was one that was just way out of bounds. I mean, I think it was a mistake the person made, either that or they're just messing with us, because I think we were coming up with like a 20 growth, and this was like 56 or something. So again,
Or they could have gone to San Francisco for some liquid refreshment.
no, that's not going to happen. And maybe some of that stuff in Canada that you can smoke, but not. So anyway, so I just picked a company out of the blue. I have no idea the quality of this, but I found it instructive. So using that research tab, I picked up the company website, and you can see it's got a lot of information on it. And then it breaks it down. There's information for investors, and then anybody who wants to do business with them. You might want to know, well, what's their ethos? What are they like as a company? Well, here's their mission statement, and they have webinars that they put on about their products and how it would be useful to you as a potential customer. And that's you can glean a lot of information from that and say, oh, this is a bunk, I don't want to pursue this, or that's interesting, I think this may be a up and coming company. So you just you can look at those things, and shows meetings they're attending to present some scientific information. And then you can access this from the SSG site, the tab, but Seeking Alpha is a good source. I find it best to be for the earnings call. They make a transcript of those. Sometimes I think it's a premium service. You can actually listen to the recording, but anyway, they'll transcribe it and you can access this for free. They also have other articles in here, some by people like you and me and some who are professional analysts. And sometimes they're good and sometimes they're not. I got tired of reading the Apple ones because there was one guy that was just hated Apple. So any time they stubbed their toe, he just railed against them. And then you have a dozen people slamming him because they're fanboys, kind of like me. So you get into that, but sometimes you can glean some very useful information. And if you really don't know much about the company because there's not a value line bit of information and this is a new company to you, you can get some good information and maybe see it's the direction the company's going, or let's say they had a bad quarter. Are the people saying, I'm dumping mine, or this is a great buying opportunity for reasons A, B, and C. So anyway, Seeking Alpha is a good source. And this is some of the things that you can see. And they have the earnings calls for several years back. So you don't just have to look at the latest one. You want to know, maybe the SSG graph says 2015 was horrible. What happened? You can go into this and find out. And the management hopefully will explain it, or the analysts on the call will grill them about it. And then Yahoo has a ton of information. Just go into Yahoo Finance, put in the ticker, and you can find out a lot of stuff. Now, from our website, the SSG tab, this pulls up Edgar. And some people swear by this, and you can see there's different types of filings. You can't just look at the 10Ks or the 10Qs, but some of these other ones provide information. And Bernard can straighten me out. I think it's section or the 4. I don't think it's the 8, but it could be. But so it shows you they have to file if there's major purchases and sales by management.
I think it's 4, number 4 for that.
4, yeah. So anyway, all those are available in here. I prefer to use the company website and look at their SEC files because it's more straightforward. But whatever, you pull it up in a PDF and then you can search for whatever you want. And then I use my brokers. This website, this happens to be from TD Ameritrade for that company. And there's the Street and Forward Equity and Market Edge, and you can read those reports. Plus on the left, you can see all these news items. And so, especially for looking at a new company, these are, I think, essential to go through. And that's how you research companies when Value Line is not helpful. Any questions?
Well, I think that was very good, Roy. Very good. I'm gonna probably play it again.
Okay.
Oh, I just wanted to add that Schwab gives um, customers access to Morningstar reports.
Right. Yeah. I
Schwab.
just showed you the TD Ameritrade. Schwab has it, and they're not the same as TD. I think there's a couple that are the same, but they have some different ones.
Yeah, they
So
all have different
well,
reports.
whoever your broker is, or like my household, we have two brokers. It's helpful to look at information from both.
Well, Fidelity has some stuff too that Schwab and TD Ameritrade don't have. So they, yeah, look around like you're saying. Yeah.
Yeah, I'm sure they
Yeah,
do. I know Fidelity, but
Fidelity is supposed to be really good. Unfortunately, in Canada, we don't have access to any of these things, but we do get TD because TD Ameritrade is owned by TD Bank in Canada. But so we get the same CFRA and a few of those. But
What didn't Toronto Dominion Bank sell TD Ameritrade and turn it loose? I think they did.
oh, I didn't hear that. Maybe.
I'm not sure, but I think that they had it for a while and they let it go. That's my
okay. Here was my suggestion. You know, this is a club to learn, and we all hopefully have our own brokers where we do our own investing. And I'm sure whatever broker you use has similar access. So you utilize those tools, and I'm sure I left out a dozen tools that you can find on your own, but there are just ways to overcome the lack of information from Value Line.
Great. Thanks, Roy.
You're welcome.
Now, can we go to our stock study now?
I guess we can. Give me a moment. Okay. Before we do that, or actually as a part of it, I ran across this. It's called Nicholson's Triple Play, and let me see here.
I think Henny has a folder on this too.
From the start. Okay. So I got this from Manifest Investing, but they talk about it and they say the triple play effect, which means, you know, it can be a very good stock to buy early. The price of the stock is depressed, but you've determined it can return to normal levels. Profit margins look like they will increase, and increased profitability of the company may cause it to sell at a higher price, or, you know, PE ratio. So there are these three things will lead you into you know, a good situation. In the last sentence, such stocks are most frequently found at the end of the bear market. Well, when we came out of 2007 to 9 recession, this was important, and if you follow this, a lot of people made money. I actually used this in December. I had gotten rid of all my stock, and I looked at this. I did a deep dive on several companies, and then New Year's Eve, I bought most of them back, and some other ones that I hadn't owned. And January and February were very good to me. But anyway, this is available on the the Manifest Investing website, and it just explains it in, you know, better detail what the triple play is. And so anyway, I think this will apply to the stocks that we're going to present tonight.
Oh, good.
So I'm hoping. Right, John? So
All day, sir.
let me get to the right. So should we start with pets?
You on it?
Okay. So let me see here. Okay. So here's the first cut I did for pets, and it's PetMed Express, and it is a pharmaceutical company, but it's pharmaceutical for dogs and cats. And I forgot to fill this part in. I will in a moment, but this historical, growth rates, both for this company and this industry. And while the sales are a little low compared to the industry levels, the earnings and pre-tax profit are higher. The profit margin is far superior to the industry, as is the return on equity. And then I think most of you know, I love companies with zero debt, and that's what this is. And it says the current PE ratio is 11.7, and we'll see later that this is lower than the average. So, that's good. Now, last year they had a dip in sales, but as I've stated in here, some of the I'm not sure their moat is very broad, and there's a couple of companies that came out with internet sales, so they, in order to compete, they lowered their prices, which kind of hurt them in their sales. But they, in their report or their discussion, they said that they were going to apply more money towards advertising and try to get that back. But they have a huge presence with veterinarians. Over half of their sales are go to veterinarians, and they're also in with drugstores. So Walgreens and CVS carry their products. And anyway, so these are the numbers. But that's why I chose 5% growth and 10% growth. I just did the 150% of earnings growth. And oh, wait a minute, I skipped a spot. So I chose 10% for growth rate because these were the numbers from analysts. Value Line said it was 13%. The BI member sentiment said 6.7. Yahoo Finance was 7. And so I just went ahead. I think if they're successful with their advertising and they continue to do well with their expenses, 10 didn't seem unreasonable to me. And then I projected the high PE at 15, which is 150% of the earnings per share projection, and quite a bit lower than the high PE average, which was 19.4. And I'll show you how I got the low price of 19.20. And on the SSG I did, it's a 6-to-1 upside down ratio with a 12.5% compounded rate of return using the average PE. And I think they'll probably exceed that, but certainly 12.5 isn't anything to sneeze at right now with the market up so much. There are not many bargains out there. At least that was my search. So I'm recommending a buy.
Roy, it's very good the way you use so many sources of information. Very nice.
Thanks. So let me see here.
Roy, they also pay a dividend, don't they?
I believe they do, and they've gone up every year. Here's the dividend. You
It's
can
quite
see.
high. It's
Yeah,
like 4%.
percent.
Yeah.
I was waiting to see the reaction from you guys, whether I'll buy some tomorrow morning.
I have a quick question
So
here.
anyway, yeah.
How it looks good, but I'm wondering how they can grow sales at 5 and earnings at 10 unless they expand their margins really dramatically.
Well, you can see their historical earnings were 18%. So even if there's a dip, it's be dipping from 18% to 10. So um, I think they've got their expenses down pretty good, and they just need to beef up their sales.
This reminds me of a thing I heard from Jim Cramer. He's talking about how people are going nuts for their pets. And this seems to be a very popular thing that people are spending a lot of money on their pets.
Well,
Booyah, Bernard.
and this is what I should have put into the first cut. I started filling in the notes, and I never moved it. But Pets is the world's largest pet pharmacy, even though their sales still keep them in the small size. And they
So,
sell
Roy,
medications. They sell other products such as bed carriers or beds, carriers, food, and a host of other supplies. Yeah, Haney.
So how would you classify this as, like, is this a consumer discretionary or
No,
consumer
it's a consumer
staple or whatever, defensive?
defensive.
Yeah.
And this is why I was trying to explain why it is. Morningstar places in the consumer defensive sector, probably because most pet owners treat their pets and family as family. That's supposed to be as family.
Right.
And or spend enormous amounts of money to keep their pets healthy. And I know I did that, with our dog, and I have friends who are spending a ton of money. So, and I've heard stories about, elderly people who are alone will, on limited income, will put money into their dog and eat basically cat food. So, I think across the board, it's animals or pets are well loved, and you do what you need to do. So anyway, they get the prescription, and then I explained past sales were flat, first time in 17 years. So they were doing good until the internet has been a problem for a lot of companies, and this one as well. But they have a plan to overcome it, and so I'm hoping they'll be successful. And this is part of their plan. And then my view is it's dropped about 50%. So if I can buy it for 50 cents on the dollar, this might be a great value play. So let me go back, and you can see that the sales is a little flat, 4%, but their profit has gone up, and it's not just because of some sort of tax thing or number of shares being bought back. It matches the earnings per share. So you can see they're doing quite well with their expenses. And that's why these numbers, the 18% earnings and the 17% pre-tax profit, are pretty high. And when you go down to what in Toolkit is called 2A, B, and C, the profit margin is up to almost 20, well over the 15% average. The return on equity is 34, far exceeding the 27 average, and then zero debt. So whatever they need to do to create products or that, they're handling with their own profit.
I
Then
have a
we have,
question.
yeah.
Is there any reason why you crossed out the first five at the first 5, 10 years?
Because I didn't think they were as relevant. You saw it up and then down, and then going back up. I just, I mean, I can delete those, put them back in, but I don't think they're meaningful. I want to know what they've done recently. The
Right,
last.
I just want to see, did the line still is kind of like a up onward, or is you said up and down, the sales earnings? They don't look like
See,
upstream.
2008 had a great return on equity. Slowed down in 09, and then sort of flat for a couple of years, and then back up. So what I was afraid of is this one bump these rates up. Now it didn't do much for the sales because that's pretty flat. Or there it
So
is.
does
But
earnings.
you can see it had very little effect for that one. But I just
Oh, that's
want
fine.
to
I
make
was
it
just looking for the trend. I was
with the
just
last
curious
5 years were.
I was just curious how they look
Yeah.
10 years. Yeah.
So in looking at the high PE, I thought 31.8 was way high. The rest of the other years, it averages about 20. So I did that, which actually lowers the average PE ratio. The low looked pretty basic, but you can see the current PE is 11.7, which is lower than the average. So that's always good for growth. And that's the 15 that I presented. And this is from using 10%, and it got a high price of 46. I mean, I'm sorry, 48.6. And then this was the end of the fiscal year. So these, I think the number, was that right? Yeah, 20.1. So that's same, even the trailing 12 months is the same as what it defaulted to. I chose to go with a couple points lower than the average low for 22. And when I did it and when I wrote those notes, it was a 6.0 to 1. This is a 18, almost 19 to 1. So I could lower these numbers and drop that upside down ratio down, but it's I think it would be unrealistically low numbers to put in to achieve
Roy,
that. Yeah.
this is, I think in your first cut, you mentioned something about using the dividend for
Okay.
forecasted low price.
So
So go to your
that'd be the
selected.
19
Yeah, that might.
right there. And yeah, okay, and that
Yeah,
dropped it to the
right, yeah.
5.9.
Okay.
So it's surprising that 22 to a 19 dropped it, that much. But with a small company, I guess that might occur. So using that, and here's the section 5. And now it's coming in at 17% and a 20% if you use the high, but even on average, 17.6 is amazingly high. But it's because the price had dipped down quite a bit. If we go back up, it says current price is 23, the high was 46. So because of their last earnings report, they got nailed quite a bit and the price dropped in half. Well, if they can pull it out next quarter, a lot of those buyers will come back. So that's why the par is so high, because basically this company's on sale.
Can you
Roy, go ahead.
go ahead? You go ahead.
Roy, is this so? Do they sell mostly to veterinarians, or do they have like an online where they sell to individuals.
Yeah. If you'll bear with me a moment, the, the answer is yes to all the above.
I thought in his first he mentioned
There's a.
CVS or
I
Walmart or
meant to
something.
put this.
Oh, okay.
Oh, okay.
I meant to.
Okay, there you go.
It's over half. Let me, if I can find it quickly.
These are the medications?
Yeah,
So I would just have to get a prescription from my vet to be able to order online?
correct.
Okay.
Now they do have products that aren't medicine. You know, you have carriers.
They will also call your vet for you to get the prescription.
Well,
Right. And if I could
Do they have
find it
C-
here.
Are they
do they-
are pets medications expensive?
yes.
They can be, yeah.
My
Like a human. I have a question
Uh,
actually for Matt. So Matt, I know you worked at the food industry for making food for pets. I don't know how food, I mean medicine, pets medicine align with, pets food. So
Yeah.
what do you think about, I don't know if there's a correlation between pet medication versus pet food. So how's the business thing? Do you guys make money?
I mean, the business in general is really good. Like everybody's saying, it's huge growth markets for sure. Just people, the spending they do on their pets is, insane nowadays with all the pets that have their own Instagrams and all this kind of stuff.
and
But
my company just is offering pet insurance.
Wow.
yeah,
I
pet
know.
insurance is huge. There's a big push in pet insurance too, and just the whole pet healthcare market from some of the big players. But I did have a question, Roy. I heard that
do
Amazon
they have
is getting into the delivery. Did you talk about that or read anything about that at all?
I'm sorry, what?
I heard Amazon is
Say
going
that
to
again,
start
Matt?
doing. I heard
Yeah,
Amazon's going to
like I
start
said,
delivering pet medication.
yeah, if they can get the prescription down, and they have other
Okay.
products you can buy. But here's another thing that I liked about the company, where like you'll see with Five, the December quarter that November and December is in is far superior in sales and profit than the other quarters. Here, it's pretty balanced.
I see what you're saying.
And
Kind of
in
like
in the spring, it's a little bit higher, which makes sense, and probably it's.
like a
I don't know if it's
human.
still true, but spring is when most the dogs and cats are born. But
And flea.
it's
Yeah, flea
pretty
and tick
flat,
meds.
and yeah. So I like that it's pretty evenly distributed. There's another slide.
So what was your concern when, Matt, you asked about Amazon doing pets and medicine, delivery. Are you saying, you read about the Amazon have its own pets meds or?
Yeah, I think they're basically a competitor at this point, right?
Well, I don't think they make the products. They have third parties that they use to sell them.
Yeah, I think they're just kind of like the middleman or whatever. These guys make the drug?
Yeah,
Or no?
so they make some and they buy them, and so that would be the complete battle with
okay.
Amazon, because where they buy a third party product. But
Gotcha.
do pets use any marijuana products?
Yes,
No, CBD.
they do.
yeah, you can get it from your veterinarian.
I'm looking at Amazon. They do have a lot of pet medications, like
Roy,
I'm just looking at dogs. There are lots.
can you go back to the front page of the SSG and show us the whole chart? Because I'm looking at Toolkit here, and it just looks sales have been flat for the last 10 years.
Even last 5 years is kind of flat. It is flat. I don't know why. Well, think about it. How can, oh yeah, sales. I would try to think. How many medications do they have?
They really expanded margins the last year, but I don't see how that could be sustainable with flat sales.
PetMed Express. Let me look.
Well, we're hoping that, they can get their customers back. And if I wish I could find that slide, because I think it was something like over 60% they were selling to veterinarians. And their 800 number is actually a pretty small percentage. And the highest is to the veterinarians. The next highest is to the stores like Walgreens and CVS.
Roy,
I don't know if they sell to PetSmart or that. That I don't know. I didn't see them listed.
Roy, their dividend is quite high at 4.8%, I think it is, or will they be able to sustain that dividend? Because
Well,
maybe that's one thing we should look at, because if as soon as a company cuts the dividend, the stock price usually just falls like crazy. So I'm just wondering if.
I mean, that's always a possibility. They're confident they can keep it up. That was addressed, but.
So you mentioned that they were going to make some. Sorry, you mentioned that. Yeah, that you mentioned they were going to make some investments
In advertising.
In advertising, would they be able to maintain the dividend and make those investments at the same time?
Well, they think they can. So, I haven't audited their books. But.
What was their payout ratio?
Well, last year was 46.7%. They were higher in the past, but their payouts as percentage has dropped while still increasing their dividend. So. And one reason why the yield is so good is because the price is down. But
yeah,
I'm just randomly check their medication on Amazon just to see if they. I'm looking at one product. It's a Provocto Chews for the dogs. For different for dogs. I don't see them on Amazon. I guess it's for flea and tick. I just random check just to see if they have anything on Amazon, but I'm not seeing it.
Roy,
I do see that people go to their website shopping and left reviews. That's quite good.
Yeah. Yeah, they seem to have a fairly strong one, although most of their money comes from other sources. But that's what they're trying to build up. I mean, I doubt if they're going to increase the percentage with veterinarians and Walgreens and CVS has a lot of the market, so there's not going to be much growth there. But it's in the internet and the 800 number where they're looking for growth.
Mm-hmm.
So anyway, that's pets.
How did you find this company? Did you just look at the screener?
Oh, I looked at the online screener, and we had made a decision based on the treasurer's report last month that we didn't have any in the consumer defensive. And so we screened for the consumer defensive sector, and we looked at several different companies. We had a beer company, we had a wine company, we had an education company, and I forget, there was one other one, and then these two. And then I went, like Haney said, BI had some problems, and I couldn't get beyond the A's in the companies that came up, and I knew that was wrong because we looked at several later. In fact, what was it, Willamette? So in the W's for the wine. So anyway, after they got their website fixed, I went through and looked at every company in the consumer defensive, and I came up with Pets, and then Fizz, which John will talk about.
Okay.
But everything that was in that screener, we looked at to see. And I mean, being new companies, being small, a lot of them are small because they're new, and a lot of them have very little, if any, profit. Their sales may be good, but they're not turning a profit yet. So we just stuck with those that had a decent profit.
Okay.
I just want to say I did a quick check of a prescription pet drug called Rimadyl on PetMeds and on Amazon. It was listed on PetMeds, but not on Amazon. And it's a prescription drug. It's a common prescription drug for dogs, maybe cats, but it's for arthritis.
Okay. So I guess you have to have prescription. You cannot buy.
Maybe I wonder if I could. Yeah. Well, that's what they're having a problem with. I mean, that's when they announced that, and then everybody bailed for a while out of Walgreens and CVS, and I didn't because it's not like putting in selling a carburetor or something. There's all sorts of red tape involved, so it's not going to be anytime soon. But
I have a question. My name's John Patterson.
Yeah.
Following up with Amazon issue. Do you happen to know, this is kind of random, but do you happen to know
I'm sorry you broke up.
Oh, John, you broke up. Yeah.
I'm sorry?
It's not
We couldn't
working,
hear
your
you.
microphone.
Oh, yeah, sorry.
Okay, here you go. Try again.
Yeah.
Try again.
So
Go ahead,
has Amazon, do you happen to know if Amazon has offered to acquire PetMeds?
I doubt
acquire
it.
that?
I mean, I don't know.
Yeah, okay.
I
So I know
guess
that
they
their
could.
strategy is often to try to acquire or try to kill a company.
Yeah, and that's like I said, it's the largest company, so probably they're going to peel off any smaller ones, I would think. If they did, it's a good company to hold ahead of time because the
for sure.
price gets spit up.
For sure. Okay, thanks.
Anything else, or we'll go on to a fizzy drink?
Fizzy drink.
Yeah, fizzy drink. Go ahead.
Just a quick question.
Yeah.
The fizzy drink and the pet meds are in two different industries.
Yep. Like I said, I screened every company that came up, and we only chose the profitable ones, and so that's what we're presenting tonight. They're in different industries, but they're in the same sector.
Okay, fair enough.
Did you by chance to look at the competitor at all or no?
Well, yes and no. I mean, I did in the screener, but some of the other ones, like one of the companies I looked at was Sam. But a lot of their major competitor is Anheuser-Busch, which is not a small company, and we wanted to stay focused on small companies because we have so little in the small. So I wasn't looking for necessarily the best in the industry. I was looking for the best small company in the industry in that one sector.
I see. I just quickly looked up at by default the competitors for SSG. The sales in the industry and peer groups are all flat. Just to let you know. Yeah, they are flat. Not just this company, just in the industry. Okay. Yeah. Let's take a look at another one then. John's. Are you making John presenter, Joanne?
You want me to share my?
Yes, I will make you presenter.
All right. Can everybody hear me?
Yes. Oh, John, you don't need to show the video.
Yeah.
That's
What
okay.
is
Okay, okay, got it.
that?
I
That's
thought it was the
okay.
top of my head.
Oh, it's been a long day. Can everybody hear me all right?
Yes,
Yep.
we can hear you. We can see your screen too.
Okay, good. So my name is John Dennis, and I'm a kind of a trial member, very raw beginner. I signed up for a trial version of Better Investing about 3 weeks ago, and started working with Andrew and Roy on this journey that we've had these past few weeks, trying to locate companies that we can present. We started out with the small companies in the consumer defensive area, and we all picked one, and we did some research. I was looking at the Willamette Wine Vineyard Company. Roy was looking at Boston Beer, and Andrew was looking at Lope, which is actually, I believe, a company. It's a school called Grand Canyon University. Well, we had a great difficulty finding any valuable reason why it would be helpful to present on these companies. And so subsequent to that, Roy and I shifted over and we looked at a couple of restaurants. We spent some time looking at BJ's Restaurant and Red Robin. And once again, we kind of hit a dead end in terms of our willingness to want to present these companies to the group. And Roy, please chime in at any time if anything I say is going off track. So
You're doing great so far.
So we ended up with these as a result of the stock, that search guide and all of Roy's work. We were able to come up with these two companies. The company that I worked on is called National Beverage Corp. Their ticker symbol is FIZ. The price as of last Friday was $53.50 a share. About 3 months ago, this stock was selling at over 100, I think closer to 110 per share. And I'll talk about maybe some of the reasons why there's been a drop in the share price. This company has been around for about 35 years. They started with one product. They were in the Midwest. And over a period of about 15 years, they started buying other companies. Shasta Soda Company, and over a long period of time, they ended up buying 10 can manufacturing plants in the Midwest of the United States. And as a result, they became a fairly large producer of different types of non-alcoholic soda and water drinks. At this point in time, there's an industry publication that ranks them as the 5th largest soft drink company in the United States. And their primary product is a sparkling water product called LaCroix, which is selling in all kinds of different retailers, and even some of the larger big box stores, Walmart, Costco, and so forth. So, looking at their historical growth rates over the last 5 years and compared with their industry, these are numbers that I was able to glean from the SSG and other sources with Roy's assistance. So, their sales and earnings and pre-tax profit, or the sales and earnings are pretty high in relation to the industry averages. Their return on investment is also good, or return on equity. And the 5-year average on debt to capital is 5.7%, but I believe at the moment this company has zero debt currently. That 5.7 is a 5-year average, which is far below the industry average, with a current PE ratio of 16.5. And so just to give you a kind of a background about the company, I guess, as I mentioned, most of their distribution happens in the United States. Their leading products is LaCroix sparkling water. They also sell products, both carbonated and non-carbonated, sugar type carbonated and more natural type drinks. Shasta, and some of these other ones that are listed there. The company, so they buy the raw materials in the international markets, and they make these concentrated drinks in these 10 manufacturing plants in the Midwest that I mentioned earlier. And then they deliver their products through different distribution channels like grocery stores, convenience stores, and independent distributors. So they've had a pretty good run over the last 5 years. There has been a problem in the last 6 months, and I'll get to that in a minute. And so the in terms of projections for earnings and sales growth, what I tried to do was be as conservative as possible to make sure that I'm not being overly confident about what this company may or not be able to achieve. And so here you can see they have a 5-year sales growth average of 11.5%. And then you can see some of these other industry experts, Value Line, Better Investing member sentiment and stuff, that's somewhere around 8%. And so I just backed it off a little bit and chose 7% as a conservative average based on some of the other analysts' estimates that we found. I think this company has potential to grow in the international markets. They have some penetration now in Europe and Asia, but I think there's potential for growth in some of those other international areas. The growth rate projection for earnings I set at 11%. The 5-year average is quite a bit higher, and I chose the 11% as kind of a midway average point between the Better Investing member sentiment and the Value Line report that Roy shared with me. You'll also notice that other analysts like Yahoo Finance and Zacks also has fairly high estimates for earnings growth for this company.
John is right. He was very conservative, and but he convinced me that play it that way. But you can see from those other numbers, we could have gone much higher. But 11 is really safe.
Thank you. And so the projected high PE, I use the same rule of thumb that Roy had taught me, which is not to exceed 150% of the 5-year average sales growth. So the high PE I selected was 16.5%, and the low PE was the selected projection was 14%. Again, I was trying to be conservative. I even removed one of the higher low PE levels on the SSG because I saw that as a possible outlier. And still the SSG has a low PE average of 15.7. So it's funny, I noticed here that it says here that I would recommend a buy. I'm not sure. There was another document. Oh, here it is. This is the part I wanted to show you. So basically what I wanted to do was, since I'm a novice and with very little experience, I certainly don't feel as though I am in a position to recommend someone buy any security, no matter how much research that Roy and I have done. That's why I selected the buy and watch. And, in my case, I would probably take a chance on this with my own money, but I'm not going to recommend that anybody else would do this. One of the biggest problems that this company has right now is that in October of last year, there was a lawsuit filed against them in the state of Illinois, basically challenging the idea that they're using natural ingredients in the production of their LaCroix sparkling water drink. This lawsuit is still in litigation, and the company has gone out and obtained an outside scientific research company to provide some evidence that their materials are natural, and that the claim of the litigant is baseless. But there's really no way to know until this court case plays out just exactly what kind of an impact it's going to have on the company's operations. And then subsequent to the Illinois lawsuit, about 3 months ago in January, a very similar lawsuit was filed in the state of New York. And so basically the basis of these lawsuits are that the company is using synthetic products and they're advertising their products as all natural. And the people that have filed the lawsuits are basically claiming, hey, you know, the reason why I bought your product is because it's all natural. My health is very important to me. And now we're finding out that you're using synthetic, non-natural products. So like I mentioned, they did go to an independent scientific research organization to try to provide some information about their source, you know, the materials that go into the making of their products. It's going to take a while for this litigation to resolve itself. I don't know if it's going to end up in a settlement or if they're going to go all the way to trial and see if they can just win. But as a result, the stock price for this company has gone way down over the last 3-4 months. It had been over $100 a share, and last Friday's closing price was 53 something. So that's kind of my first cut, is this idea that there may be a huge buying opportunity here if the company successfully navigates through the lawsuit and their share price goes back up to where it was. You might find you know, the stock might double in value in a couple years, maybe less. But that's neither. I don't have any, you know, solid financial research to back up a claim like that.
So as you speaking, Joe, I am drinking the La Croix, what do you say, La Croix, sparkling water. So
Yeah.
our family, we don't drink soda, and my daughter, she wants to buy some treat. I don't want to give her sugar or candy. So I found this soda. It says only sparkling water and says natural flavor or something. I don't like they say natural flavor. What does that mean? I always wondered about same thing. I'm kind of curious about this lawsuit outcome or research outcome. What I find out about
What is the flavor that you have?
the flavor. I have the lime. So
Lime.
Celine picked the
Now,
lime.
in the ingredients, does it mention lime juice at all?
No, no lime juice. Just a natural flavor.
Okay. You know, that to me would be some sort of citrus flavor, but I don't know. I don't know the company
Yeah,
that
it
well.
didn't have. Yeah, I looked. They have a 4 or 5 different. They all said the same thing: natural flavor and sparkling water. That's only the ingredients. No sugar, which is good.
From my understanding, though, the word natural has no legal definition.
Exactly, and that's,
It
I think,
has. It has legal definition.
It does not.
It
It's
does
my
not.
understanding. It does
So
not.
I feel like it should be FDA's job. They need
Yeah.
manufacturer to list to really exactly what you contend.
I would look at insider transactions to see what the insiders are doing about this.
One thing I do know, I think in some of my reading, I found that the company principals, executives, and so forth, I'm pretty sure they own about 78% of the entire stock of the company.
Can you show us the SSG? I'm just curious to see the fundamentals because I was not able to download.
Can you see?
Yes.
Okay. So the reason why I crossed out these 5 years was because I was trying to get a number for the most recent 5 year for the first cut, but I can back these off.
Okay, John. Also, didn't you find that 2012 is when it went public?
I believe that is correct.
Oh yeah,
So,
it did not really help. Yes. Oh yeah, I did.
Yeah.
Okay, just a little bit slow. Okay. Wait, 2012 went public. Oh.
So
Okay.
that they are supposed to post information from 2 or 3 years ahead of going public,
Mm.
and so I think that's there. Um, it's still got pretty good numbers, but we felt it was better to do it. Like I said, with mine, the last 5 years, which matched the public.
Right.
Uh,
And one of the things I think that I mentioned earlier is even if I zero in on the last 5 years, which was a high growth period, when I did my projection estimates, I scaled them way back
Mm.
so that I was not trying to leverage the growth of the last 5 years and try to make some sort of a ridiculous high play on the future potential. By scaling back the projected sales and earnings, the hope would be is that we get to a more reasonable, outcome in the future.
Yeah. What was the last 5 years of sales growth? I forgot. I know you can what you can cross, you just cross 2008, 9, 10, 11 on the graph, the x axis to make you, if you want to do that on
The
the
last
SSG.
5 years,
on the SS,
yeah, I could
On
do
the
that.
SSG, I was talking.
Yeah, I can
and
do
I
that as
think for
well. So
sales,
what,
About
looking at the
12%.
trend line, I'm
Yeah.
not sure it's going to change a
Yeah.
lot, but
Just
it's
do
the
the x axis. It's a quicker. Yeah, there. So I think
take out 2008.
so. Okay, so it's about 12%. Okay, that's why you do 7. Okay. I looked at that. It was very interesting. So they had about 40% 2012, and I paid a half down 2013, and then now is all no debt, or paid off.
Yep.
yeah, that's what I was saying. They have no debt at the moment. The 5-year average is like 5.7%.
Yeah, they paid off.
And
Is that?
they've been
Mhm.
debt free for almost 4 years.
Were the lawsuits from consumers or from their competitors arguing
Consumers.
that?
They're
Okay,
consumers in
just curious.
both Illinois and New York.
And I'll bet that if you research the law firms, they're typical ones that file shareholder lawsuits, often
Mm.
for no reason at all, hoping that they'll get a settlement.
Mm.
Not that I would badmouth the legal profession, but I do have a license to do so.
Can we look at the quarterly data for Fizz? At
Which part would you like to see?
the last 3 columns, the bottom of the change in percent change.
There we go.
So, Roy, isn't it correct that we like to see those last 4 quarters on these last 3 columns increasing?
Well, correct, but you can tell from looking at the left side, the last 2 quarters were down, and that's because of concern. Let's see, look, sales. Sales are actually fairly flat. The last quarter was down a little. Their earnings per share was down the last 2 quarters, but they've been going up prior to that. It's just some people backed off of the buying it, and this explains to me why in Rayleigh's and Safeway both they have these big stacks of it as you walk in the door. And I thought it was a promotional thing. I didn't realize until we did the stock study that it's been around for a few years. I thought it was a brand new product, and so I think they're really pushing it and have lowered the price. I think I could get a couple of weeks ago get 3 12-packs for $5. So probably they've lowered the price to get the consumer back, and then as they can deal with these lawsuits, then they'll increase everything. But because of the lawsuits, the last 2 quarters I would ignore, unless you're really worried about it. But I think it skews the results of the company how they normally do.
Well, compared to your pets stock, I'm looking at the quarterly data for that, and it's dramatically different. Can I take over the screen and
Sure.
show you? Okay, hold on.
Joanne, were you able to import their SSG?
No, I'm just, can you see my screen?
No.
Not yet.
Your presenter, Joanne.
Okay.
There we go.
Okay. So see how the last 4 quarters on the pets look?
Right.
I mean, to me, this isn't this.
This is what you want to see.
This is what you want to see. Yeah.
Yeah. I mean, we acknowledge that Fizz has some warts, but at 50 cents on the dollar. And if we think that they're going to be successful and they'll get their customers back, it's in that triple play scenario.
But I think the pets data shows more, I guess, good company management with this last 4, don't you think?
Yeah.
Well, I don't know.
No, I think it fits.
Could be. I mean, because some of that information predated the lawsuits, and if it was only one company, if we had money to buy, I probably would be pushing for pets only. But because of we need to utilize some of that cash, I think there's enough here. Now, if this was at full price, I would not recommend it. But at 50 cents on the dollar,
oh, I see.
I think it's worth the gamble. And I'm not even sure it's much of a gamble. But I mean, if they lose a lawsuit, one of two things will happen. They'll get trashed and the price will sink, or they'll reformulate.
I went to Amazon to Yahoo Finance, and what I can see in both of these companies is that the insiders are not selling in the last 6 months. So there's the reaction to the lawsuit. They're not panicking. They're holding on to a lot of stock, these Fizz guys.
Mm-hmm.
Yeah.
Yeah, and it's non-alcoholic, so they're not drunk on their own stuff.
Okay. So does that wrap it up?
So
I think so. John, do you have anything else? I think that pretty well covered it.
Yeah, I missed the second page, the P stuff for the Fizz. Is that dry?
Give it back to John.
Okay. John Dennis?
Yes.
Okay.
I'm doing it. Okay.
Oh, you're doing it?
Okay. So I walked away to look the details one more time. I was looking the can to see the ingredients and to see the front where they say the lime, just say lime, natural flavor, and in the ingredients just sparkling water and a natural flavor. So I would just.
Well, tomorrow morning, give the company a call and say, "Hey, I bought this for myself and my daughter because we want to be healthy, but you're not telling me what's in there."
I see other products too, other food. I always look at the ingredients. They all say natural flavor. I thought FDA just to let them, it's okay to not listing the flavor.
They're really, I think, only regulate if they're trying to say this has got health benefits. Then they slap them down. There's a lot of wiggle room, and something I keep hearing to be careful of the term natural is sugar is natural. Sugar cane or sugar beet. Tobacco is natural. It's a plant product.
Yeah.
So, that's why I like beef.
So I went on the LaCroix website, and it says the flavors are what ingredients make up the natural flavors in the LaCroix flavors. The flavors are derived from the natural essence oils extracted from the named fruit used in each of our LaCroix flavors.
Yeah.
There are no sugars or artificial ingredients contained in nor added to these extracted flavors.
Mm.
So it's, you know, the lemon or the lime juice and maybe the zest.
Mm.
Or maybe that it's an essence oil. I don't know, because they have
Well,
to.
that's from squeeze. I think that comes from squeezing the rind.
Mm.
Well, if
They
you
use-
extract something from something else, usually the extraction process introduces some ingredients that are maybe not inherent in that product. So
Yeah.
Well, it could be that, or it could be, I've seen it where it was just they squeezed it down to the pulp and then squeezed the pulp, and that extruded the essentials. So usually when I've seen oil with a product like that, it's usually from the rind.
Mm. Yeah, comparing this company with pets, I see is that just looking the outcome of SSG, pets gives higher return, also pays dividend.
Right, I would agree with that.
Yeah, but I national.
We
But
have
that's
money to
fits
spend.
right.
Why couldn't we
Fits also.
just buy pets and buy twice as much?
I kind of also curious about this beverage company, and I usually don't drink soda, don't drink sparkling water, but I'm able to drink. I just feel like, oh, maybe I don't know. I don't want to give a chance to this company. So lawsuit can take a long time, right? We don't know. It can be a long time.
Yeah, it can. I
Yeah,
mean, there's
it can take long.
discovery and then various pleadings along the way and motions. If they've got this third party analyst, you know, looking at their products, and they submit that with a motion to dismiss, that could be done, you know, sometime this year.
Yeah. See, this company also dropped a half of it compared to 52 weeks high, same as pets.
Right. Yeah, they're
So
both.
yeah, both.
In my opinion, they both can come back, and they both then
Yeah.
meet that triple play scenario that I presented at the beginning. That's why I presented it. I mean, this isn't like OLED or some of the other ones that, you know, we've talked about over the years. Like I said, they've got some warts, but
Yeah.
I think you just view this as like 2009. You know, we were in a recession. Nobody wanted to buy stocks, but those who did made a ton of money.
Yeah, there's certainly other beverages that have just natural flavors, and I'm wondering why this one's being pointed out. Seems they're all the same. You know, it's carbonated water and some sort of flavor.
Well, just think of that attorney in LA that got now indicted on 16 counts. You know, some attorneys will do anything. So
Yeah.
Maybe this company is well known or larger.
Yeah,
You
maybe.
Well,
go with the lawsuit, go with the company has money, right?
yeah.
oh
Well,
yeah, you always go for deep pockets.
the
Right.
company that started this whole industry is Perrier. Way back when, Perrier was the first kind of like bottled sparkling water. And so I think this company, over a period of time, was trying to compete against Perrier because Perrier had a reputation as being kind of high class.
High end, yeah.
And
Right.
so this company just wanted to be, you know, a drink for everyone. It doesn't have to be a drink for the rich people.
A drink for everybody. You can just turn on your tap.
You know, no. Well, I don't drink tap water. I run it through a strong filter or, you know, something else. But Jay, you reminded me because I didn't know what this was, and I didn't know if I wanted to buy, you know, 3 12-packs. So I bought a bottle, which was I think 24 ounces, and I really enjoyed it. So, and it was the lemon lime. So Not that anybody has the same taste I do, but
Yeah.
Can
I
we
mean,
move, can we move
also,
along to the reports? Because
also,
sure, we can think about, yeah.
but
okay.
I drink, Diet Pepsi, so I mean, I'm putting poison in my system, so this has got to be better than that.
This is better than diet soda for sure. Yeah.
Okay, we have Megumi for 5 and Matt for, I think it's Fleet Core.
Should we do the free call first? This is overdue, long overdue.
Okay. Matt, are you there?
Let's do it.
Oh, oops.
Okay.
Okay. Making him a presenter. Okay.
Okay. Can you see my screen there?
Yes.
All right. So FleetCor, they actually reported. I just missed it. I don't know what happened last time. I wasn't paying any attention. Anyways, the price hasn't changed much since last month. Currently at 251.57, and we purchased at either 151.29 or 59. I'm not sure which one that was, but
So they just
we
had a
made,
new 52 weeks high. Because
yeah,
52
they
weeks
did.
high, 245. Yeah, they just hit the new 52.
Yeah. There you go.
Mm-hmm.
Current PE 27, so obviously, yeah, the 2-week high is pretty high price to earnings ratio, especially compared to their 5-year average of 21. So the price is a little bit on the high side right now. Going down to the financials and the 10K, they did grow revenue 5.5% and for the quarter, and then 8% for the year. Assets have grown slightly as well. Current ratio has pretty much maintained year over year, right about 1, so it's comfortable. Free cash flow actually increased a lot, which is really good, about $220 million from one year to the next. And then they've also increased their cash significantly year over year, about almost double. Okay. So historical sales growth 26%, 5-year 22, and this most recent quarter 8%. So it's definitely slowing down a little bit. The sales forecast that I used was 12% for sales. Sorry, this should both say the 6%. I believe is I'm sorry, 12% sales and 6% earnings. I think is what I was meaning for that to be. But we'll see on the SSG. 12% earnings. We'll go to that next. Shares outstanding decreased slightly by about 1 million shares. I think they do have a buyback program. Continuing to go down. They have really good numbers on pre-tax profit, 45%, return on equity 21, debt to capital 59.1%. So those all look really good. Projections for next year. I highlight here the kind of net income. What they're forecasting is for about 3 to 6% growth over 2018 from 2019, and that's GAAP. So if you look at their adjusted right here, they're projecting a little bit higher growth of 8 to 11%. So at 12% earnings on the SSG, we're on a little bit on the high side, but the analysts are even higher than that. So kind of pick somewhere in the middle is how I chose. And then just some interesting assumptions that they put in their 10K or their earnings release. Their projections are based on $2.60 a gallon price of gas. So if we go a little bit higher, they'll earn a little bit more money, have a little bit better earnings. If it goes a little bit lower, might have a little bit worse, because they really make a lot of their money the higher the price of gas is, since they charge a percentage of the transaction. Market spreads, I don't know what all that means, to be honest. But interest expense is $160 million, and shares outstanding to decrease slightly to 89 million as part of their share buyback. and then no acquisition. They said no acquisitions, but then since then they actually acquired this company, Invoice Pay. I don't know much about them. Seemed like kind of a smaller company, and I couldn't find what the price they paid for it was. So I really don't know much about it. Given that there wasn't much news, I assume it wasn't like a major transaction. Final recommendations of hold. So let me go to the SSG really quick that I had open somewhere. LT. So you can see here, I did use 8.5% sales, 12% earnings. So the analyst estimate was 18%. Again, I felt that was a little high, especially given that their current year wasn't even projected that high. So that I have there. You can see pre-tax profit 38%, 18.5, 55. So all pretty comfortable. Debt to capital's reasonable. It says it's increased slightly in the most recent year, 59%. So I think it is something to watch out for if that continues to go up. But it's not, far out of the range where it has been in the recent past in the mid 50s. And then for using the average high and low PE, I did cross these earlier years out. They just seem to be significantly higher than the recent past. They must have been in a higher growth period at that point. So I actually used 26 as the average high, just slightly below where it is right now at actually 28 with today's price. And then the low, I used the 16, which is slightly lower than the average low, 17.5. And that gives us, buy range of one.
Sorry, for the low price, can you click that box again? For the low PE, you may want to use the TTM 12 months trillion. So you just click the menu update, click that yellow box. Yeah, it will automatically correct that. Yeah, there you go.
Oh, okay. Thanks. All right, so yeah, change it just a little bit. Buy zone 141 or below 207 basically, and then hold 207 to 338. And this is not updated, but it did close today at 251.57. So that was last week's price, up a little bit. So I recommended a hold based on all that with the 1.4 to 1 upside down, and then a 10% high PE return in 5.4% average PE. Any questions?
Looks good to me. Thanks.
So I have a question. Why would we hold it if it's a 5% return?
Yeah.
I'm just going with recommended. What's
I know.
So,
I mean, just from
I had this company.
It ends right there.
Yeah, I sold it when it hit 52 weeks high. And I
just don't understand why it's,
you look at your whole portfolio and we're getting 0% on our cash.
Okay.
So 5% is better than nothing. But that's the way the SSG is coming out. Quite often we've beat the SSGs. I don't think any of our SSGs gave us the returns that we've got on some of those great purchases we made. So, SSG gives you great guidance, but it's often pretty conservative.
Okay.
If we didn't have money and we wanted to buy something else, we would, perhaps sell it. The other thing is, what do you have to buy with the money that you would get from selling it?
Got it.
Oh, okay. I remember why I sold it. Not just because it hit to 52 weeks high. That was one of the reasons. The main reason was I read articles about the trucks that they are going to I forgot which company, they are going to have self-driving trucks. When Henny and I, we studied this company, we thought about this. And at the time, I think some of you made a comments too. It will take a long time, to make it possible have self-driving trucks. So it's coming. I think in China too, because China logistic that in that industry it was very advanced. So they are using self-driving trucks, and I realized that, oh my gosh, I think it was going to have impact to this company. It was at the 52 weeks high, so I sold it. That was just my
Okay.
reasoning.
Okay.
Matt, did you read anything about self-driving trucks? Or anything for this company?
Nothing in particular. I mean,
Okay.
I don't think, I kind of agree with the sentiment of it's a long ways off before that's going to happen. You know what I mean? Before there's a substantial number. So
Yeah, we
I'm not
thought
that
about that
concerned with
could
it.
happen, but right now it happened, and I think it was in China, and also because the technology was so advanced, they make things quicker than before. So when I see that happened in China, so I sold it.
Okay.
Well,
Can we?
number
Sorry.
one, we don't have those available, at least not here. And have you driven on I-5 much? There are a ton of trucks between me and where I want to get. And it's going to take years, even when they start selling these trucks that you're interested in, it's going to be years before the companies, especially the small independent drivers, are going to be buying those trucks. So I figure I'm going to be dead long before that happens.
I don't think so.
Okay.
So?
Can we
I'm
move?
going to say,
Can
Jay,
we
I'm going
move
to say I'm going to
forward?
be dead long before it happens.
Okay. Can we move forward? Because I think we're going to go over as it is, and we need to get to Megumi and do the voting.
Megumi, okay.
All right.
Yeah.
Do I need to share with her?
Oh, okay.
I can do it.
Okay.
Okay.
I'll make her the presenter.
Just as an FYI on the pet insurance topic, I work for UC Davis, University of California, Davis, and this year for the first time during open enrollment, they offered the option to purchase pet insurance. So I think it's an up and coming reality because people spend thousands of money on their pets from my experience. Anyway.
Okay.
You guys hear me?
Yes.
Yes.
Okay. Okay, so I did the annual report for Five Below, and can you see my annual report summary sheet?
Yes.
Okay. So as Haney said, we purchased in June of 2016 at $45.99, and as of last Friday, it closed at $135. So it's gone up about 200%. From everything that I've seen and read, the numbers are trending in the right direction. The only, I don't know if it's worrisome, but something that I noted in my email is that the free cash flow did decrease from 100 million to 70. It's the first time it's happened at least since Morningstar provided the data, which was since 2015. It's the first time it's gone down from year to year. So that's something that I'll have to keep an eye on. Roy did think that because the company has no debt and that they're expanding, and one of the ways they expand is by opening new stores, that perhaps their investment in new stores is causing the free cash flow to go down. And other possibilities were stockpiling inventory and credit problems, but I just don't know how to find that in a financial statement, if there is a way to find that. And then for the SSG, let's see. I selected the analysts. So last year, the forecast was 20. I selected 21%. Analyst numbers were 21.6. For the earnings, I selected 22. The analyst last year was about 21. Analysts numbers were actually about 25.2, and the preferred procedure was 19.8. So I picked 22, which is in between the two. For evaluating management, no debt, which is great. And then for next year's guidance, everything sounded positive. They're going to continue to grow by essentially building up, getting more leases and expanding by about 150 stores. Right now they're at about 750, and eventually they want to get to 2,500 stores. And they're also expanding the way they market their brand by social media and TV. And that all seems to be paying off really well. Let's see, what else? No mergers, acquisitions, or divestitures that I read or that I could find. So, yeah, I think that's about it. There was one other thing that I noticed on their numbers. Their sales were going up, their pre-tax profits were pretty much even. Taxes had gone down from 35 to 22. Diluted shares outstanding increased slightly. But their sales growth trend was slightly down, and their EPS growth trend was up. So why those two items are diverging, I'm not sure, but might be something that I have to look into some more. So that's that on the forum. Any questions?
No.
How many stores total do they have?
What was that?
You know, how many total stores do they have? Do you know?
Right now they have 750, and there's California has stores, and then everything else is pretty much sort of east of the Mississippi, and then the states bordering the west of the Mississippi, except for like Iowa and Vermont, I think, are the only two exceptions. Yeah.
Okay. And they built 125 last year on 750?
No, they got to 750.
Okay, yeah, they have 750 total, and they built 125. Got it. Okay.
Yeah, and so that was their goal, and they met their goal. And they
Wow.
and then for next year they want to go 150 more because they want to get to 2,500. They don't give a time frame, but that's what they're shooting for. Yeah.
That's a lot of growth. Oh my gosh, that's great.
Yeah, yeah. So.
Oh, and the cash flow you can find on the cash flow statement, just for future reference.
On the 10K?
Yeah, there's a statement of cash flows. I'll send you an email afterwards.
Okay. Roy helped me find it on the he helped me find it on the Morningstar. But
or like why it went up and down, I mean.
Oh, it gives an explanation too?
Yeah. So they spent a lot more. They basically doubled their spending on property, on building stores, and then doubled their inventories did go up. So you guys are right.
Okay. Okay. So is there anything else you want to see here? Here's yeah, it's in a hold. And let's see. What is this return? 8.4. I think that's it. If nobody has any questions. Okay.
That's great. Thank you.
Mm-hmm.
Okay, so now we come to the part where we vote for a motion to buy a stock or not. Does anybody have any motions?
Motion for the soda company.
Okay, let's see. Okay. Did I send out a ballot?
Yes, you did.
Okay. Can everybody use their ballots to vote?
I'm curious to know why Matt likes that company.
It's a great value buy. I love anybody that's getting sued and their stock price goes down. It's the perfect
Yeah,
time
it
to
is
buy.
the discount price for sure. Actually, both of them.
Yeah.
Yeah.
And I'm betting on corporate America. I don't know if you've noticed lately, but a company can do whatever they want. That's my main reasons, and the rest, I mean, it was a good presentation.
Mm.
Looked like a good company besides that with the no debt. Both of those had no debt. And
Yeah, I think they were both
strong
great companies
financials.
from financials and all that. They were excellent.
Okay.
Matt, is your left hand getting tired? All those left-handed
What?
What did you say, Roy?
A left-handed compliment. I mean, you were complimenting them,
Oh.
but they can do whatever they want.
Yeah, I mean, just facing reality, I feel like.
I just found it humorous, but I agree with you.
Yeah, I'm not concerned. That's my way of saying I'm not concerned in a cynical way. Yeah.
Yeah. Like I said, if it was fairly valued, then I would definitely hold. But it seems like that's one to scream to, and I think I'll put mine in tomorrow.
Okay.
Seems like a company.
Okay, yeah.
Mm.
So Matt, well, I have not received his vote, but he
Sorry.
that's okay.
There you go.
I see that. And Mina's still on, but okay, there you go.
Yeah, I'm just trying to get the
Okay.
ballot working right now.
Oh, that's all right. The motion's already passed.
Oh, okay.
75% yes, 25% no.
Oh, really?
So motion passed to buy. Hey, what was the motion? By how much?
1,000, whatever our
1,000.
normal.
Oh, okay, no, by default, basically. Default
Yeah.
1,000. Okay.
Yeah, we didn't say. I always forget.
And I'll make a motion to buy pets.
Okay. Do we need to assign who's going to follow Fizz?
Well, until John decided if he's going to join the club. Oh, I guess he can't because he presented the national. Yeah.
Yeah.
So
Sounds
who
like
has?
Matt wanted to.
I'm happy to take it on if.
Thank you, Mina. Thank you.
Okay.
Mina, are you following which?
IPGP. That's the only one right now.
Okay.
Yeah, that's great. Thank you, Mina.
Okay. And also, I propose that we add the quarterly report dates so that when we assign somebody, they know when their dates are for the people who do the studies.
That sounds good.
Okay. All right. So what was your motion?
Pets.
Roy? Pets. 1,000 shares?
I want your dogs to be healthy.
Thank you.
Yes, 1,000.
Okay.
It's $1,000, right?
Yeah, dollars.
Not 1,000 shares. Yeah, $1,000.
We need a second, folks.
Oh, I second. This is John Patterson. I second.
I've already voted.
Oh, you did?
Yes to pets.
Yeah, I voted
Oh.
already too.
Okay.
Do you have to refresh? I don't have a new ballot.
Just the same ballot, just refresh. Or is it edit or response or something, submit again.
Okay.
Yeah.
Okay.
So I submitted ballots.
I open a blank form.
Yeah.
This is making me love Google Drive more and more.
I thought we were going to try iClub.
Yeah, I thought that.
Yeah. Well, when you take over, we'll have you just set it up.
Joya Bata, you did
Mine isn't working. Sorry. I'm trying to do it from my iPad. And
okay.
Oh, wait,
you have Jojo and you also have. That's okay. So right now we have a 7 voting and 3 people or 2 Yeah. So you are the only
I
one,
voted,
and also Bernard.
Wait, good. I said yes.
Yes, you did.
I
So,
voted,
All right.
I voted against Soda Pop and for the pets.
I vote
I
for
don't know.
pets too.
okay, motion passed. So
Okay.
100% on the pets.
Okay.
Okay.
All right.
All right.
Okay. So the last thing on the agenda is, who do we assign pets to? Who has 2 stocks now? Okay,
I have
Mina
one
has
I'll
2
stock,
take
stocks.
but I have
pet. I want to do it.
You want to do it?
yeah, he should because
Yeah.
he's expert in that area. He makes
Yeah.
pet food. He makes.
Just so
I
we know,
forgot he
I
makes.
voted yes, but my wife voted no because she hates
Oh,
it.
she's listening too. That's funny.
What's that? Yeah, I told her what we were doing. She works with
Oh,
them actually, and her description was that they're like the '90s version of Chewy.
wait, what? She works for what? That company?
She works with them. Yeah.
Oh wow. What does she say about that company? I need the inside
She
info.
said they're the 1990s version of Chewy. If you've ever been on their website.
Oh.
I have a question for you, Matt, actually. With
Yeah.
the company, the 800 pet meds or whatever, you know how they sell to
Uh-huh.
vets, and then you have the clients of the veterinarians, when they buy their pet's prescription through like pet meds, do the vets get upset? Are they expecting the clients to buy all the drugs through them, or is that or does it
So
matter?
people in the industry would have you believe that the vets get upset because it's taking business away from them. So yeah, they generally think that the vets don't like it. But what they're trying to sell them on is that if more people buy more drugs, the whole industry is going to grow, and there's just going to be more visits to the vet and all this kind of stuff.
I
So
see.
some are coming around, but like generally, yeah, they don't appreciate it.
Well, let me tell you my experience. When we had to buy some medication for our dog, the first round we bought through the veterinarian, and they told us the 800 number to call to get it cheaper. So I
Okay,
think
yeah, there you go.
many
Wait,
veterinarians are on board.
I don't understand that cultural reference about 1990. True. Can you?
Chewy is another website, but Chewy doesn't do RX medication.
Yeah, they're all.
They have Rimadyl, so I don't know.
Oh,
Google
okay. They
or
do.
check
All
that.
right. Okay.
Yeah. But I mean, she doesn't have like direct, she works around them, not like directly with them, I guess.
So both of you work around the pets. You must have a lot of pets at home.
Yeah, we do. Well, she's vet, so she,
Oh, there you
what
go.
she signed up for.
Yeah. Oh,
Yeah.
great.
Okay.
Okay.
And I guess what you signed up for.
Yeah.
Well, yeah, I mean, that's a better way to put it, Roy. No.
Yeah.
Okay.
Good one.
So just for the last item on the agenda is that we have officer elections. We usually do in May. So just want to discuss how we've elected officers in the past. We've had a committee, and it was Roy and Tom who kind of looked at, I guess, inquired with other members whether or not they'd want to be an officer. So if there's anybody that wants to change positions or we ask that people hold their office for at least a year, and then they can continue on for another year, but after that, then they have to switch and give other people an opportunity to be officers. So Roy and
It would help us out if you would email Tom and me if you have interest. We'll be contacting people, but that would save us some time.
okay. And just to let you know, all the current officers will, if you are stepping down, that if you would support the people that are coming on as backup and as a resource, that would be great. And I think that's it. Is there anything else? Okay, I am.
Just talk to our attendees.
Yeah,
Okay,
no,
I'm going.
before that, I have to ask, do we need to ask John first if he's interested in joining us, our prospective member?
Oh yeah, John
Yes,
Day.
I'm very interested. I'd like to be a member.
Okay.
Okay.
So at this point, I'm going to adjourn the meeting and stop the recording.
But we need to get feedbacks from the.
Right, but I don't want that on the recording, right?
Right, I know.
Okay,
So
okay.
we're just
So I'm
gonna-
adjourning the meeting and stopping the recording.